Hey everyone, welcome back to Corporate Decoder, the place where we help you understand what is really going on behind the corporate jargon. And spoiler alert, this report from Photonics does not disappoint in the jargon department, but stick around and we'll break it all down. Today we are looking at a Form 8K filing from Photonics Corporation. Now this isn't your typical quarterly report full of financial deep dives instead. It is a current report that signals something important has happened. Think of it like a company shouting a heads up to everyone, because a significant event just occurred that investors need to know about right away. So what is this heads up about? Well, Photonics received a notice from the Nasdaq stock market, that is the big stock exchange where their shares are traded, saying they are not playing by the rules for continued listing. Basically, they missed a deadline to submit their financial report for the period ending the 30th of September 2025. Nasdaq said, hey, you are late on this important document. Now, this doesn't mean they are immediately kicked off the stock market. Nasdaq has given them a chance to fix this. Photonics has until the 19th of January 2026 to submit a plan to get back on track. And if they need more time, Nasdaq can even extend that by another 180 days, which would push the deadline to May 1926. So they have some breathing room, but they definitely need to act fast. Missing filings like this can make investors nervous because it suggests potential issues with the company's operations or its ability to manage its reporting obligations. Their main stock is trading under the symbol A's on the Nasdaq. When a company fails to meet listing requirements, it can create uncertainty and potentially impact the stock price because investors might worry about liquidity or the company's overall stability. Now, Photonics has checked a box indicating they are an emerging growth company. This means they are a smaller company and they have been given some flexibility in how they report their financial information. They have also elected not to use an extended transition period for complying with new accounting standards, meaning they are keeping up with the latest financial rules. The company also attached a press release from the 28th of November 2025 to this filing. This is usually where they try to explain the situation to the public. We'll dig into that, but the core message from this filing is that a deadline was missed and Nasdaq has flagged it. So what does this all mean for Photonics? Well, right now the biggest story is not about their sales or profits, but about their compliance with stock exchange rules. Missing deadlines for financial reports can be a red flag to investors. It can suggest that the company might be facing internal challenges, perhaps with staffing in their finance department, or it could signal that there are underlying financial issues that are making it difficult to prepare these reports on time. Imagine trying to get your taxes done and you just keep missing the deadline. People start to wonder what is going on behind the scenes. The report is signed by Wayne Tupola, who is the president and CEO. This shows that the leadership team is aware of the situation and is the one officially acknowledging it to the CAC. It's their responsibility to ensure timely filings. In my opinion, this filing is less about the financial performance and more about corporate governance and operational reliability. The fact that they missed a 10Q filing, which is a quarterly report, is a serious administrative issue. While missing a deadline doesn't automatically mean financial distress, it certainly doesn't inspire confidence. Investors want to see consistency and transparency, and a missed filing disrupts that. The company has a clear path to regain compliance, but execution will be key. If they can submit their overdue report and a solid plan to Nasdaq quickly and smoothly, the market might look past this as a temporary hiccup. However, if this leads to further delays or a prolonged period of non-compliance, it could signal deeper problems and potentially lead to a delisting, which would be very damaging for shareholders. Alright, that is our quick decode of this Photonics filing. What is your take on this situation and what it might mean for the company's future? Let us know in the comments below. If you found this breakdown helpful, be sure to hit that like button and subscribe so you don't miss our future dives into corporate filings. And don't forget to join our Discord community linked in the description for more discussions and direct access to our team. Thanks for watching, and we'll see you in the next one.